Namaskar everyone and welcome to our earnings call to discuss the Q4 and FY2024 annual results. I really appreciate all of you logging in, those who have taken the time to be a part of this conference. So I thank you all personally. That said, as mentioned, that we would be having a flat year, and we did exactly that. We had a flat year as we had seen, but the coming year looks very interesting for us. I'm very proud and happy to say that we've opened the Ayodhya on Ram Navami. Era by Orchid Ayodhya is now open on the 17th of April, and it has got an excellent start. We are doing very well in terms of better than expected start we got in a very short time. Normally, there's a long gestation period for such hotels whenever we open a new hotel, but here it has been instant off the block. So I really thank God for a great blessing on start. We also have some other new properties which have opened in the last year, which are now gearing up. Orchid Jamnagar being one of them, along with many other locations which you had, like Era by Orchid Sambhajinagar, Era by Orchid Nashik, and when many of the other things which I will share forward, how our rebranding and upgradation exercise has given us very good fruit. So thank you very much for so I thank all those who have supported us in our Era by Orchid conversion. Secondly, one significant development I'd like to share. I am grateful to our investors and partners, Alpha Alternatives. The company was able to repurchase its outstanding NCDs, non-convertible debentures, amounting to 128.45 CR. Out of that, which was a loan, an ALF of 114, and through internal accruals, 14 crore, dono mila ke, we were able to do 128.45. So I thank Alpha Alternatives in being a very strong and able supporter and partner and helping us in our difficult times, and I look forward to their support in the future as well. This, by the way, is a strategic initiative which has a big benefit for us, tying up with Axis Bank, because the rate of interest is 10.75 from the earlier redemption premium of around 21%. So the company will save huge in terms of interest outgoings, and it's towards our target of becoming debt net positive in terms of being neutral. As we had planned that our company will be extremely debt light. So that has already been, as we can see, from 300 crores or rather 298, we have come to 170, and we will be further coming down through a mix of internal accruals and otherwise. So I thank Alpha Alternatives for that. We still have two partners with us who will be retiring once there's in the month of July, August. So I thank True North also and SBI both for being with us there. With that, ARR has been a significant improvement across our properties. I will specify a little more in detail, especially when it comes to our Era brand. Orchid has always been doing well, Jadavgarh at Pune. But our Lotus Resorts and even our Era brand have done exceedingly well. Earlier, when it was not Era, we had an average YTD ADR of around 5,800, but now we have it at around 6,300. So that's a significant jump we've had in the YTD. That includes some parts where it took a time to gear up. But in the last average 5 months, you can say that the average has been at around 6-7 around approximately, which has been very good. So Era Mumbai, and same way with Era Bhubaneswar. Earlier the ADR was around 3,500. Now it is closer to the 4,000 mark, 3,900, 350 approximately. And even in terms of occupancy also, both have shown very good consistent occupancies. So that's been also a very good thing. And even the same thing with us in our Era by Orchid Nashik, where we have done an average after upgradation to around 2,900 ADR from earlier 2,150. So from 2,150 it has gone to 2,900, and that is, by the way, let you know, our ARRs are always minus of meals which we provide. So if we do a AP plan, which is including your breakfast, lunch, dinner, which we do a conference, or MAP plan, which is your breakfast and one meal, which is sometimes a lunch or a dinner, or just breakfast. This is after cutting that, because some industry people don't report ADR with breakfast cutting. They do it as a net sale. whereas we do it minus the breakfast and all. So that's where it's really good to see that our brand Era has got very good response, and Ayodhya again in a very short time we are getting an almost 6,800 ARR in Ayodhya in this last whatever short tenure that we've had of just 15 odd days, 14 days. So God is kind. Thank you very much to all our team members who made it happen. Another factor was that which impacted basically our EBITDA, which we already know, was our high lease rentals because after the sale of Era from 125 CR, we saved 21% cost of interest on that. So that was around 8.5 crores of lease which is there, which earlier would have been interest, has become a EBITDA. Which has got minus from the EBITDA. So that's definitely one of the reasons why our EBITDA looks lower than it actually is. But that's because of the shift from interest to now a lease rental. But that said and done, still Era was able to earn, as we had discussed, that after paying our interest also, rather our fixed lease rental also, the company had made an additional GOP on top of that, which basically is approximately 4 CR in the last 5 months. So I had in our guidance given that the company will make 5 CR annually, above and beyond after paying our interest, our lease rental, which is little on the higher side. But that said and done, still the company, so I'm very proud of our Era by Orchid Mumbai team, that in 5 months, above and beyond the lease rental, the company has made an EBITDA of 4 CR. So that shows that the move was a win-win for us both in terms of saving interest also, and at the same time still getting money more if we would have taken it as a simple management agreement. So thank you for all those who showed confidence in us, our investors and others. With that, the outlook, definitely we are looking at expanding across India. Our expansion is not as aggressive as people would expect it to be. The reason being that wherever we are growing with a sure-footedness. We are growing where the product fits in, and we will have a long term. We have learned a lot of things in the past, and unless and until it is either an asset light or if it is a product where we are putting down and doubling down in terms of a lease rental, then the product should be of that standing in nature, which adds value to our members list. We have a huge list of regular members, and more than 32% of our sales comes from repeat business. So this is something which is very important, that wherever we are opening, our customer confidence remains the same. So that's one very good thing, that in the coming year, Orchid Dehradun will open, Orchid Chandigarh will open, Era by Orchid Bhavnagar will open. We are very proud to let you know that by June, the Orchid Toyam, which is a management hotel, 21 rooms, but a high-end Ayurveda and other spa-based hotel, which is treatments and Ayurveda, long staying, that will open. Then one more good news which Dr. Kamat had shared, what that is fructifying, is basically one more hotel in Ayodhya. Approximately 50 rooms will open. That is also going on. And looking at what we have already got, we are very buoyant about that. Then Era by Orchid Noida will open. And our work on Mahodadi Palace, which is going on, that also expansion will go on. So we have a good set of hands full with the coming, and this is above it. This is what is confirmed, not more than. There are other things also happening, but this is what we have committed. We have confirmed. That is it. With that, I'd like to hand it over to Smita to say a few words with her what she does best, which is handle the company's finances and keep us on track and make sure that the company does not overspend and is doing a good job and keeping us in check. Because as promoters, we are always raring to go, but you need a good sounding board, and Smita ji is just that. So Smita ji, please take it from here. Thank you very much.
Thank you, sir. Good evening and namaskar everyone. I would like to briefly touch upon the key performance highlights for the quarter and full year ended 31st March 2024. I would like to begin with the quarterly update. On consolidated basis, revenue Q4 FY24 were up by 5%. Year-on-year stood at rupees 84.5 crore. This was due to improvement in ARR. Annual room revenue across all our properties, as just now rightly mentioned by Vishal sir. Our Era Mumbai Era by Orchid Hotels brand ARR increased significantly. Secondly, I would like to even mention over here, Orchid Mumbai and all across Orchid brand also done the good job, and even their room revenue also increased significantly. EBITDA stood by 23.32 crores, largely due to increasing employee costs pertaining to the appointment of additional employees for new properties, that is Noida, Ayodhya, Jamnagar and Aurangabad, that is Sambhajinagar. Total key we introduced or newly introduced in the our hotels is 193 rooms approximately, with 193 rooms, and the PAT was down 97% year-on basis for Q4 FY24 due to increase in tax and finance costs. Moving on FY24 update, our revenue stood at 304 crore by 3% Y-on-Y basis. EBITDA was down by 17% year-on-year basis, stood at 91 crores, while EBITDA margin was at 30%, PAT stood at 45 crores. With this, I conclude my remarks and request the moderator to open the floor for a question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from Guneet Singh from CCIPL. Please go ahead.
Hi sir, thank you for the opportunity. I would just like to follow up on the question that I posed in the last Concall. I specifically asked that if we would be able to make the 100 CR guidance that we had given for FY24, and I specifically asked if we are confident to do 33 to 35 CR EBITDA in Q4. And to that, you made a remark that that company is confident of achieving that in Q4. So I just want to understand, what gave you the confidence back then to achieve a 33-35 CR EBITDA, but we fell short by about 30-40%. So what might have went wrong probably that we fell short by this much?
That time now, one of the things basically, we have also done the redemption of the share of the NCD, NCDs. We did the repurchase of the NCDs. So there are expenses related to that also which have been there. There have been few additional expenses which have come based on statutory requirements which are there, which have been done in the year. So there have been certain things which as a operating are one time which have come out of the EBITDA obviously, but there have been a one-time expenses which have been part and parcel of our business. So if I was to tell you, one of the basically things which is there is basically like I said, one, there were various expenses related to certain statutory payments which have been done that have deducted from our GOP. Then secondly, we have done the redemption. A lot of our fees, from that whatever EBITDA you mentioned, that has gone over there. There have been certain brokerages and other fees, legal fees also which needed to be paid, which have been done. So before the year ending, definitely we would want to give a clear thing of the past of before April. And that's how those payments are there, because of which the EBITDA guidance per se would have come down as per what we said. But on an annualized basis, if you recall, I have said that we would do 100. And if we add some of these one-time extraordinary expenses which we've done over the last 1 year, it is definitely crossing that 100-105 के बीच में जो हमारा EBITDA हमने देखा था. One is basically like example, like I said, the lease. Now the lease, which is interest, got the 8.5. If you write that back as a loan, if it were, then that would have been going as our interest cost. So that is definitely one of the things which is 8.5. Then there have been some OPEX also which we have done, which were needed to be done, which were because in the prior years we have not done those OPEXs. So those OPEX expenses have had to be done, which is around 2.5 crore. So we've done that also because now the coming season will be there, off season rather. So we need certain things to be ready so that in the off-season we can take advantages when it comes to the high volume mice which comes from pharma and other companies. So based on that, our overall annualized guidance still was correct in that sense. Now whether that 33 we fell short, definitely we fell short in terms of that absolute achieved number, but it's based on whatever logical and required expenses had to be done.
Alright, so fair enough. But I just want to understand, did you not forecast while giving the guidance for Q4 of about, say, 33 to 35 CR EBITDA, because the actual numbers fell way short of that. So, I mean, did you not forecast these one-time costs?
Guniji, this simple thing, if today the company would save suddenly a windfall, thanks to our partners willing to, their lock-in was there till 18 months. But on their own accord, as a win-win partner, if they gave us an opportunity, why would the company not save 21% to 10.75%? I mean, that itself on 120 crore, we are talking about a 10 CR benefit. So for that, if I have to pay out certain things and the company will benefit in the long run, then I must see the bigger picture and not just a small picture that, okay, just to keep my guidance, should the company not save that 10 crore rupees in interest, which, on 21% on 120, it would have been 22 crore rupees. So we've saved that much money for the company. So I'm okay if I was wrong to be right in the long run. I'm okay with that, sir.
Fair enough, sir. If it's just that if the guidance is not met, then there is a certain question about whether we can trust the guidance in future or not. But I got your point. But so for FY25, what kind of interest payments are we looking at with this reduction? We are looking at, sir, 10.75 on 10.75%, sir. And we are mota, we would be around approximately 25 CR for the year in a cumulative. All right, sir. So my last question would be regarding the guidance of 400 CR in FY25. So, is it an internal target, or is it something that we aspire to reach, or is it something that we are pretty confident of achieving? And if so, what kind of contribution do we see from our existing properties, and what kind of additional contribution we see from the new hotels? And secondly, since we will be having lots of, we have new properties coming up, so that also might have one-time fixed costs or setup costs. So, will that impact our EBITDA margins negatively, first of all? And if so, what kind of steady-state EBITDA margins on a consolidated basis are we looking at for FY25? So, sir, we have guidance which I stick by, which is in the coming year of doing 400 CR because of the additional of new properties. We will have the Orchid Dehradun, the Orchid Chandigarh. We were a little delayed, unfortunately, by a few months in the case of Ayodhya. Otherwise, Ayodhya should have opened ideally when Ram Janmabhoomi Sthapna happened. But there are many things which are out of the company's control because these are assets which are developed by the promoter of the property because it's a lease. It's not me doing it. And that's why sometimes certain things take a little time. We will not compromise when it comes to our standards or safety. So if some fire safety matters had to be completed, if certain interior matters were to be completed, then we would want that to be done and then only take handover. We don't want to be in a hurry to take something. So we stand by the 400 crore turnover target for the next year because by then Irabai Orchid Bhavnagar would have opened. The entire year has got now for Jamnagar to mature. Earlier we only had a short time and the Ambani wedding also happened at that time. So the company benefited for whichever that duration was there. And so all these properties which we now opened will fully give their entire annual turnover. So next year 400 crore turnover guidance which we are given, the company will stick by that on a consol basis to have that turnover. All right, sir, and the EBITDA margin that you're looking at? I request you, sir, to give other people also the chance. I'm sure we can come back to whatever your queries are. Sir, this is just a follow-up and my last question. This is part of the previous question itself. What is it, sir? The steady-state EBITDA margin that we're looking at, considering new properties are coming in, would we be able to maintain 30% steady-state margins on a consolidated basis? 140, sir, is the guidance we have given, and we are sticking by that guidance for the coming year on a consol basis of 140. This would hopefully take into account also the existing hotels maturity
and the new hotels which are opening and some of the costs which are related to that. So 140 is the guidance, sir, for the coming year.
All right, sir. Thank you. All the best.
Thank you, sir. Thank you.
Thank you. The next question is from Dipesh Puneta, who's an individual investor. Please go ahead.
Hi, sir. Thank you for my question. First is that in the quarter gone by, the quarter 4, I see the finance cost was 14.9 CR and depreciation amortization was 4.8. So how much of this was lease payment? I just want to know what the total rent cost is.
Pitaji?
Yeah. Total rent cost was 8.5 CR. My total payment was the 20 CR against the interest. So I have saved over here nearly 50%, which is attributed to my, PAT. This is coming for 2 CR, 1.75 to 2 CR.
So 8.5 CR is the total rental cost for the quarter. Is that correct?
No, not for a quarter. This is for a 5 months.
For 5 months?
I think ये holistic मांग रहे हैं. आप पूरा मांग रहे हैं ना, sir?
Yes.
9.3 CR.
9.3 CR, sir.
This is for the quarter?
Yes, this is for the quarter.
Okay, thank you. Got it. Second, my question is around the Orchid Mumbai hotel that we have. So what I was reading at the annual report of Plaza Hotels Private Limited as well, and what I saw is that it is owned by Plaza Hotels and it is given to KHIL on operations and maintenance.
Yes.
And then we call it an owned hotel. So is it technically a hotel owned by KHIL or no?
So the land and building are two different things. In 1994, when this IPO had happened of Kamat Hotels, from that time, for whatever reasons, I'm actually unaware of why this equation is like that. But it is right there from the inception, which is when IPO happened in 1994. We call it a owned hotel of Kamat Hotels, and it is the owned hotel of Kamat Hotels because the building, the entire asset of the building, basically not building and machinery, are basically the Kamat Hotels thing. And the land itself is basically on the, sorry, what is it? Just one thing, sir, I'm just getting some data.
Yeah.
Yeah, nothing. No problem. So correct है, वो बराबर है ना? So that, yeah, that's correct. So that land is basically owned by Plaza, and it is an arrangement which is there from 1994. So that is how it is. So it is owned by Kamat Hotels because the entire turnover is captured in the books of Kamat Hotels, sir. Okay, just like when you are listing it. So that's that's it. That's basically it. As we have reported in our balance sheet from 94.
Okay, and KHIL paid a 3.6 crore royalty expense to Plaza Hotel in FY23. I'm assuming for the leasehold land.
Correct, sir.
So is it on a percentage of revenue basis or is it a fixed payment each year? How is that determined?
Percentage of the basis, sir. Percentage, as reported in our balance sheet. So if Kamat Hotels doesn't do well, Plaza loses.
Okay, got it. And one other question is on the NCDs that you had raised.
Sir, I'm sorry, I cannot answer. Please, let's give everybody chance. There are others also in queue. You can come back again, sir, after this call, because otherwise it's not fair to others. There are a bunch of people also. So please, sir, come back afterwards. Huh?
Okay, I'll come back. No problem.
Thank you, sir. Thank you.
Thank you. Before we take the next question, we'd like to request participants to please limit your questions to one per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Ashaf Patel from Molecule Ventures. Please go ahead.
Thank you for the opportunity. Namaste, Visalji. My question is that, firstly, I would like to congratulate...
Please go ahead with the question.
Yeah, am I audible? Hello?
Mr. Patel?
Am I audible? Hello?
Yeah.
Yes, sir. We can.
Yeah. Firstly, I would like to congratulate entire KHIL team for refinancing our majority proportion of the outstanding NCD at almost half the interest rate. Moving forward, my question is that we will be receiving close to 40 crores on account of warrant conversion. So how do we plan to use that 40 crores? Because we already have a steady state run rate of 80 crores of annual CFO. Which we are doing from our internal accruals. So on top of it, we are going to get a cumulative 40 crores on warrant conversion. How do we plan to use that amount?
So, thank you, Mr. Patel. That's a very, very good question. Basically, the funds, by the time they come, we intend to use that for two purposes. One is we also have to pay the pending NCDs of True North and SBI. So, we intend to use that money for repayment of the NCDs along with internal accrual money which is available to the company by that time for paying them off. So the company will not require much to take borrowings as our target.
Participants, please stay connected. We seem to have lost the line for the management. Please stay connected while we reconnect the management line.
Sure.
Thank you. Participants, thank you for patiently holding your line. We have the line for the management reconnected. Over to you, sir.
Yeah, sorry everyone. Sorry Ashokji, the line got cut. So basically, like I was saying, 40 crores will be used for repayment of our NCDs also, repurchase of our NCDs, and they will also part of it be used for from internal accrual to repay them.
Got it, sir. So total cash flow inflow which we are going to get for FY25 would be closer to 80 crores of cash flow internal accruals and 40 crores of on account of this warrant conversion. So we would get close to 120 crores. So which can we can actually prepay the majority part of the debt. So do we intend to do that? Like how do you expect the debt number to pan out at the end of the financial year?
The company does not intend to repay the debt of Axis Bank anytime soon, considering that we want to basically establish again natural banking relationship with the banks and banking listing. So our target is not what we have reached at 10.75, but to be a extremely well-listed, rated company where it comes to something around the 9% mark, which actually is not very difficult if we continue to do what we are doing. And we continue to expand from our internal accrual. So then there is no shock again to the system. Just to remind all my listeners and people in general that even in Corona, the worst case EBITDA that the company did for the year was 33 crore. So if today I am sitting with 100 odd crore rupees of Axis supported finance, then even with the 10.7 or a 9%, we are talking about only 10 crore, 12 crore. Which even in the worst of Corona, because now we've seen the worst. Now if ever Corona type, any situation comes back, we know what the worst will be. Because now we are veterans of a disease. So basically we know it will only be more plus of that. So keeping that in mind, we are in a very comfortable position that we will be able to fulfill our obligations at that time also. Though I hope Governor Sitaraman ji will give us ECGL as part 3. Firstly, Corona hona nahi chahiye. But agar hua to, then I'm sure the government will be more proactive in supporting this time.
Got it, sir. Sir, second last question from my side. Can you please quantify, given that historically we had made losses for a couple of years, so can you please quantify cumulative tax benefit which is sitting on our books?
Sir, I do not know the answer to that question. I can do one thing. We can take that note down, Smitaji, and
sure.
Let us see accordingly and share that later on in future.
Okay, sir. Thank you so much. All the best.
Thank you, sir. Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to join the question queue. The next question is from Shyam Garg from Ladder of Finance Limited. Please go ahead.
Thank you for the opportunity, sir. My first question pertains to how we intend to move forward in future. Will we be looking more towards the managed business, or will be going forward with the owned business as well?
A very nice question. We are intending to do both. We intend to take up properties of management like the Orchid Toyam, which will open on 1st of June or 1st week of June. It's again a management property. There are few more management properties which we have in pipeline, which we will share at the appropriate time. Till they sign up, we would not like to put the cart before the horse. So management and lease both are the focus of the company. We are looking at, we tend to look at lease more because lease gives us better control. But what has happened is that as we have been coming out of our financial challenges over the last 18, 14 months, people have looked at us with much more positive and more aggressively that no, we are one more contender. So more and more people are offering us properties on management at terms which are favorable to us. What I mean by favorable to us is not necessarily monetary. It is basically that when we are saying that when we are Kamat and we intend a qualitative experience for our guests, we want that the owner also have that same mindset. Unfortunately, at times, owners don't have that same mindset. They think a hotel is just a fancy room and with no logic of the service science behind it. So that's where basically when we get like-minded owners, we don't mind management also. And luckily now we are getting that. So we'll give you some good news in the coming time of some more management hotels. That will basically add scale. It may not add much to our top line or bottom line, considering that what will you earn in terms of percentage. But what it does offer you is basically a scale, and it also offers your customers more options. People who want to stay with us, like I said, 32% of Kamat hotels is repeat business from people, and this is not just some hearsay. We track it based on mobile number, based on guest profile, based on our members who come and stay with us, and then they get points. So basically, based on this scientific methodology, we know that 32% of our business is repeat.
Okay, thank you so much, sir. I'll come back in queue.
Thank you, sir.
Thank you. That was the last question in queue.
So I think you can come back. Who is that?
Right, we have a follow-up question from Ashish Patel from Molecule Ventures. Please go ahead.
Great.
Sir, our employee cost, as you mentioned, because of our new hotel openings, employee expense is up from 50 crores to 60 crores year on year. So how do you guide that employee cost to go going forward in FY25? Can we expect that employee cost would remain at similar level of 20% of sales, and the increase in employee cost would only be in sync with the increase in top line?
It's a very good question. See, what had happened is that till 2022, broadly, we were on a no need to grow, so we were on a very set manpower, manning. See, if you are not going to expand, you will not have a cost of keeping the next in line. If you are not expanding, you will have only ideal amount of people working in a particular department or in a particular role. But now that we are expanding, a simple thing like that we are expanding, people who, let me share with you that who were not part of Kamat Hotels before, when we were not expanding, were people from, say, a project team. Now, we've had to invest in a project team because every month we are signing up with one or two people or our own internal upgradations are there. There are many things happening within the company. So suddenly now you have a team of 4 people who are your internal project team going to different places. So there is a travel cost, there is a labor cost. Now many of these costs are added into the labor also because a car or a vehicle provided or this thing is an added expense in the salary, and it is kept in the salary cost. So do we know that the actual life cost of an employee, some people might be putting it in operating cost, but we put it that if it is associated with that employee, okay, like uniforms is associated with the employee, so it goes into our labor cost, so that's how we know the real cost of our labor, not that what is just a salary or a thing. Even if a perk is provided, that perk is put in a labor cost. So there are many people like this who I gave you about project team is there. Then there are people who are part of our expansion team in business development. When we had no business development, there was no business development person. But now we have people in BD. Now we have people in, like I said, interior and in civil. Now we have people who are there in part of our taxation and in part of our head office who earlier were not required because we were just doing a functional work. But now with more units coming, multi-states coming, taxation department has grown. So this cost is going to be there, but this cost will start tapering out as more units come about on an HO level basis, on a unit level basis, and on different functions. So this is but naturally expected that as we expand, these people were to join. And somewhere down, aage jaake, within the next probably 12 months to 15, 18 months, this will automatically taper down because it will be a part of our normal business cycle. See, when Corona happened, many people showed a reduction in their labor because first people, like say Corona was, suppose this was on right now, and suppose Corona came back. The first team bichara who would go in our company is basically the people who would be for project. Because if there's no project, what would they do? So they would probably leave us. So suddenly our payroll would look good, but it's not a good thing. It's that those people who were doing an expansion growth are lost. So that's how basically during Corona people brought their payroll cost down. We were not operating swimming pools, so there was no lifeguard. We were not operating gyms, so there was no staff in the gym. Today again everywhere all those staffings are there. So that's how basically these costs are there. So that's coming to your payroll example.
Got it, sir. Thank you for a very detailed answer. Sir, the NCDs which are around 45 crores of remaining NCD which we expect to even refinance post-July. So what sort of timeline are you looking at the same? And can we use the warrant conversion amount towards refinancing that NCD?
Sir, firstly, it's 58 crore, and I answered this question that when you asked me before, the warrants money which is coming along with internal accruals will be used to pay off this 58 crore rupees.
Got it, sir.
Probably around July, August, when their 18 months complete.
Okay. And what would be our currently the total annual lease payment, considering the upcoming hotels as well?
So upcoming data I don't have, but the current for the last quarter, 9.3 was shared by Smitaji.
Got it. Okay, sir. That's all from my side. Thank you. All the best.
Thank you. Thank you.
Thank you. Next question is from Dipesh Puneta, who's an individual investor. Please go ahead.
Hi, sir. Thank you again for the follow-up. I had two questions. One is on the NCDs that were raised in January. 22 crore, I think, loan was given to Plaza Hotels. Do we know what the rate of interest was for this loan that was given?
Sir, on the NCD, sir, the loan was 21%. Sorry, what is it? 21% on the net listing.
Yeah, but part of the proceeds of the NCDs was used to give out a loan to Plaza Hotels by KHIL. I think that was 22 crores.
Plaza Hotel has given a corporate guarantee.
Plaza Hotel has given a corporate guarantee, sir. There is no loan given to Plaza. You have misread somewhere, sir.
Okay. Government, then on the contingent liabilities in FY23 annual report, there were 60 crore of contingent liabilities relating to a tax demand, which had not been provided for. So could you, are there any details around this that you can share?
I will check up, sir. Nikhilji, please note it down. We will just see on this
45.3, clause 45.3 of the annual report.
Okay, just write it down, Nikhil. फिर बाद में जरा देख लेते हैं इस पे. We'll reply to Dipesh.
Yeah, actually I've written to your IR as well. I didn't get a response on this to asking these questions. Okay. I just write a follow-up email.
I will be happy to answer all your questions like I've been doing over here. So, I apologize if it's got missed from my team.
No problem. Thank you so much, sir. Thank you for taking my questions.
Thank you, sir. Thank you.
Thank you. Before we take the next question, a reminder to participants that you may press star and 1 to ask questions. Next question is from Manoj Shroff from Kiva Advisors. Please go ahead.
Hello, sir. Thank you for the opportunity to ask. Sir, if you can take us through the guidance of the 400 crores for next year. So the 100 crore incremental, if you can give some granularity about where that 100 crore is going to come from, like is the breakup half from the existing hotels and half or 30-40% from the new hotels? And if you can share, like we had some hotels which we've just taken over in the second half of the year, and some were not operational and they're going to get operational. If you can just share some granularity or some occupancy increases, so that will give us some visibility on the 100 crores incremental we are speaking of.
So, sir, it's a nice question, and I'll give it to you. A broad breakup. Basically, sir, out of 400, approximately 80 to 90 will be OHPPL, which is a subsidiary 100% owned of Kamat Hotels India Limited. Around 300 crores again would be Kamat Hotels India Limited. And around approximately 30 crore rupees would be the acquisition we've done in Envotel along with Ilex. Smita, Ilex, Envotel, और कौन सा subsidiary अपना? OHPPL बोल दिया मैं. जो नहीं, for example, it's part of Kill. All our other subsidiaries all put together, operational subsidiaries like Envotel now and this one, our Ilex, all put together would be the balance.
So actually, I was trying to ask the 100 crore incremental. Like, how is that 100 crore incremental from which properties? Like a few properties, like you said, Kamat.
You mean to say specific operational property? I'm not following. Hello?
We seem to have lost the line.
No, I can hear you. No, that's it. Caller's line. Oh.
Correct. We'll move to the next question. Next question is from Guneet Singh from CCIPL. Please go ahead.
Yeah. Again. So I have the same question as the previous participant. So basically, I mean, we would like to understand the incremental 100 CR of revenues that we're looking at. Can you give a breakup of, I mean, how the incremental revenues will come up, like in a granular form? Like what percentage of revenue would come from, say, the existing properties due to higher occupancy or higher ARR, and what percentage of it will come from new hotels that are coming up? I mean, just to get a sense of how we're arriving at this number.
So, sir, I'll repeat again. Approximately 80 to 90 will come from Orchid Hotel Pune Private Limited, which is the 100% subsidiary of Kamat Hotels India Limited. Approximately 20 crores will come from Envotel, which has been recently purchased by the company. So that basically comes to around 120. And the balance 280, 290 mota would be basically from Kamat Hotels India Limited. This includes again, this is basically the breakup.
Sir, just to understand, I mean, I want to understand what percentage of the incremental revenue would come from, say, existing 16 properties that we have. So are we looking at, say, 15-20% growth in the existing property itself? I mean, for an example. So I want to understand the breakup in that sense. So
okay. That detailed breakup. I got what you mean. You want to know that if Orchid Hotel has done 100 crore hypothetically this year, okay, then next year if it did 105, so you want a 5% increment in Orchid. If Ira has done 50, then next year next year is done 55, then you want 10%, like that. You want a guidance.
So not even that granular, but yeah, just to get a sense of, say, on a consolidated level, if the 16 properties did, say, 300 CR this year. So I mean, what kind of growth are we looking at the existing properties that are already functional? And what kind of incremental revenue is coming from the additional properties that are coming in FY25?
So this year, as a console, we have done 310 crores of top line. Okay. Hello? Okay. So we have done 300 and approximately mota. This 310 will become 400. Out of that, basically the additional new units which have been there, which is basically 90. Out of that, mota 70 will come from the new unit addition and the normal growth of business, or around 5-8% in our existing Mumbai hotels will come from this 80 crore. And the balance basically will be Envotel and other new acquisitions we've done, which will now mature for the full year and give us the result of the full year, because we bought them at a different time. So now that's how basically the 310 crore rupees guidance of the actual of this year will become 400 of next year, sir.
All right. So basically from the new additions, we're looking at 70 CR additional revenue. Got it. And sir, just to get a sense, I mean, what kind of reduction in the other expenses or statutory expenses or savings from that end, from the restructuring that we did? I mean, can you give a quantitative figure of what kind of savings are we looking at in FY25 because of not incurring these?
Yeah. So basically, if mota at 20%, the company if the company would not have done the refinancing and the payoff and other things, the company would have broadly around 66 crore worth of interest the company would have paid in when it did the entire transaction with Alpha. 63 crore rupees worth of interest. But midway, we were able to save the company a lot of interest by selling off our one property, which is Era Mumbai, but luckily still being managed by us. And like I gave the figure that we earned 4 crore rupees above and beyond after selling that property. So the company basically reduced that interest on 125, which mota comes to around 26 crore rupees. And then now further, the company on buying back its NCDs with the support of Alpha, because it was mutually agreed. So based on that, the company has reduced on 128 crore rupees, which would have become 30 crore rupees of interest broadly, has come down to 10.75 with now Axis Finance coming in. So that is the reduction of now from 128 to 12 to 13 and a half, 14 crores up. So 14 crore now is the interest annually we'll have to pay on this 128. So that is the big reduction, as you can see from where 128 ke upar mota we are talking about almost 35, 38 crores coming down to now 14 crores. So that's a big saving there also. So these are one-time expenses related to whatever would have happened, but this interest outflow burden has gone. And also in the meantime, the company has reduced the percentage of the share, because now new shares also have come based on the warrants that were issued when this transaction happened. The promoter, having full confidence, has put its money where its mouth is and increased the reduction in the listed pledged shares. And going forward, we are very confident that the company, once it repays its obligations of 58 crore, the company will ensure that it is free from all the past challenges.
Right, sir. I got this point. So, sir, we are also looking at other expenses of about 30 CR per quarter. So, with the restructuring almost done and with the NCDs and everything out of the picture, mostly, majority of it. So, I want to understand what kind of savings are we looking, in terms of statutory or legal expenses that we incurred, say, in Q4 or in FY24. So what kind of savings are we looking at with the restructuring and all of this, the mess already behind us?
So, yes, you're right. Out of this 30, you can take mota at least 10, which is not going to recur. Okay. There have been certain statutory payments we had to make, which were basically routine to regularize and other things and all that is there. Then there are certain other expenses of brokerages and fees, some legal fees, which have had to be paid, which are not recurring in nature. So this 30 should come down next time towards 20 figure. Maybe even lesser than that. Smita ji is confident of that coming even lower, but she's indicating to me around 16. But I still say you take it as 20.
All right, sir. So, that comes to about 40 CR savings annually, if I'm not wrong.
Yes, sir.
All right, sir. Got it. That's all from my side. Thank you. Wish you all the best.
Thank you.
Thank you very much. That was the last question in queue. I would now like to hand the conference back to Mr. Vishal Vittal Kamat for closing comments.
I am really grateful to all, and Guruji, I really appreciate your very specific. You really do your extreme homework and come, and that's very good because it keeps Nikhil ji, Smita ji, and myself on our toes in terms of having that clarity of thought and being able to share that and express it with people like you who take all this effort. I'm grateful to all who have taken the time out and asked their questions. If there is anything pending, like Puneet ji has asked that one thing, okay, so we will definitely get back to Mr. Puneet, and even Ashok ji asked something. Ashok Patel ji. So those people also will get back to. But thank you everyone once again, and I look forward to the coming year and fulfilling what we've said, and probably with good news to break it even further. Thank you. Namaskar.
Thank you.
Thank you.